Good morning traders, welcome to this ICT Silver Bullet London session market review on May the 19th, 2023. We're going to be looking at the opportunity presented to us on EURUSD during this session. I like to look at EURUSD in the London session because I feel it has more volume than looking at the US indices. So our first job when we come to the charts is to mark out our swing highs and swing lows. So I've already marked out the Silver Bullet hour there, and we'll start marking out our highs and lows. So we have some buy side here. We did have buy side here, which has just been taken out. A swing high. We've got the Asia high, which has been taken out. And we have a fair value gap on the 15, a little bit higher up. So potential buy side up there with the ultimate equal highs from the US session yesterday above us. As far as sell side goes, we've taken yesterday's low out. So we put a low in overnight. And this was taken out. Not closed convincingly underneath this low. So we've created, let's just see if we can get another copy of that. Relative equal lows at the low of the day. Been unable to close down, pumped up, taken the Asia high as London opened, left fair value gaps. So we are looking bullish on the 15-minute time frame. Taken a swing high from yesterday's US session. We have this kind of doji bullish candle here, which we'll look to be rejecting from. Let's drop down to the 5. See if we can see anything. So we've got a fair value gap here on the 5-minute. Let's just expand that out so we can see a little bit better. There's only a small fair value gap on the 5-minute chart going into these two up closed candles, so an order block there. Let's see what the order block looks like and how we're respecting this order block. We'll bring that across. It's nice to see we're respecting 50%, so consequent encroachment of the 5-minute order block is what's caused the rejection. And now looking through the Asian session, we've got a breaker block here. So we have our last bullish candle, which caused this breaker structure at the bottom here. We've traded through that. So this would be now classed as our breaker block. For this session. So we have rejected, we're coming down into a breaker block. As I would view this, we are closing back inside this range now. So we've taken this buy side liquidity, we've rejected off this order block, and we've closed back inside the range, which I would expect us to come a little bit lower now to try and take some kind of sell side. We do have a 5-minute swing low there. Take some kind of sell side before we could look to pump any higher. These equal lows, I mean, they're really tempting, especially given the fact that we've been so bearish over the past week or so. What do they say? The trend is your friend. So go in line with the trend. So it would put me in a bearish mindset. We're back inside this range. I'm going to get rid of that order block there. We just need to look now, premium and discount for the day. We can see that we're up high, so we're obviously in a premium for today, which means that we should be looking for sells. We'll be looking for buys at a discount of the day. We'll see if we could ride this back down into a discount if we're going to look for more buys to go up for some of this buy side. So I'll be looking to try and get into a sell to get us into some of this sell side liquidity within this hour. I think that looks more probable from what we're seeing. Let's see how things play out. So dropped onto the 1 minute chart now. Going into this with a view of trying to come back into the range. So strong push up, filling the fair value, the bearish fair value gaps. Order block. So we're into our last order block. 1 minute order block at the top here. I'll delete that so we can see. Okay, so we're rejecting off that order block. We've left a bullish volume imbalance at the top and a bearish volume imbalance coming back down again. So we have this now void essentially. Let me get rid of that because that's and a fair value gap. Okay, so pumped up, order block rejection, fair value gap. This would be the short entry that we would be looking for. 5 pips would be my stop loss with a 5 pips or 5.2 just to cover the fees. Take profit. As I mentioned in previous videos, I like to treat EURUSD and the S&P the same, so I basically run 5 and 5 on both of them to close out. The ultimate target will be getting us into this discount area, taking sell side down here, but I would close out after 5 because I just like to grab 5 handles and be done. Don't like to hold trades more than 10 to 15 minutes. Let's see what happens. Okay, so we've created another fair value gap. So we would have to follow this down as far as the ICT Silver Bullet rules go. We're just trying to get in on a fair value gap to get in line with price action to hit our draw on liquidity. So I would take the next fair value gap down. 5 handles is going to, it's not going to quite cover, well 5 pips, sorry, it's not quite going to cover that high, but it does cover the upper fair value gap if we get a rejection. Let's see if we get tagged. Okay, so we've got tagged in on this bullish candle. This is nice to see. So fair value gap coming down again, at least to take this high, this low, sorry, which would give us our target. Fair value gap's getting filled, coming back. So we have an order block here now. Wouldn't want to see that really getting broken. Let's zoom in so we can see the price action. So our order block is holding, pumping price down, and we hit target. So that's nice. We can see that, as IT outlines, these bullish candles are holding price down until we hit the target. So if you were a braver man than me, you would now be holding this to try and take sell side out. So our closest swing will be down here in a discount area. What I have noted, this slightly yellow section here, let's go to the 5, just to show you, my indicator's highlighting this as the new day opening gap. So today's opening gap here, we've traded through it, so we may come back and retest the new day's opening gap. Let's see, we'll stay on the 5-minute chart now, just to speed things up. So I would have closed out in full here. Let's see how far you could get if you were to hold it. So we're back into this breaker block. Rejecting from that breaker block. Close through the breaker block into a fair value gap. Have we tapped this order block here? So we've got, wouldn't class that as an actual breaker block, that's the proper one, but we do have an up closed candle here which price has just tapped. pulling back, closing. So that's the silver bullet hour over with. However, again, in ICT's teachings, you can hold trades longer than the silver bullet hour. Volume imbalance coming down, so nice bearish volume imbalance. That looks strong. Coming down. Okay, so we've touched this order block now. Filled that fair value gap. Just tapped that order block and started to reject. We'll remove the breaker block off the chart because we've cleared through that. We are rejecting away from that order block. Isn't that amazing? That's current price action. So you can see literally to the tick. Price rejected that order block. That's crazy, isn't it? All of that price action is literally wick to wick, filled that, and then took off. So holding for the sell side wouldn't have been profitable if you did hold for that. I mean, that's a 3R, so you would definitely be in a break even before you hit that. You would hopefully have taken some profits off by then. You can see why I like to close after 5. It's a high win rate strategy. Closing after 5 pips literally gives me in and out within my very short time window, so I'm not having to withdraw any kind of drawdown or anything like that. Take the trade, close down the chart for the morning session, and we're done. I hope that was useful. Please leave any comments or questions below. Like and subscribe, obviously that will help the YouTube videos and the channel out massively, and I'll see you later on today for the US session. Thanks guys, see you soon.